Picture this. We've got two people, and both of them are starting out their financial journey with exactly $1,000. Now, the first person spends every single day completely glued to their screen. I mean, they are sweating over candlestick patterns, watching charts like a hawk, and trying to predict exactly where prices are going to move next. The second person, well, they just buy shares of some great companies, and then they go right back to living their life, right? They just walk away. So welcome to this explainer, because today we're going to look at these two fundamentally different paths to building wealth and hopefully figure out which one is actually the right fit for you. So I've got to ask you a question. Fast forward 10 years. Who do you think actually has more money? The stressed out screen watcher or the relaxed life liver? You know, if you spend literally any time on social media, you probably think that first person wins hands down. We are constantly bombarded with these flashy screenshots of people supposedly turning hundreds into thousands overnight, claiming they quit their jobs before breakfast. The internet makes this fast-paced approach look incredibly glamorous and easy, but the reality of what actually builds lasting wealth over a decade is very, very different. And to understand why, we really need to break down what these two paths actually are. All right, let's jump into section 1, Path A. The active trader. Now, before we judge this approach or even try to compare it to anything else, we need to define what trading actually is. It's a term that gets thrown around a lot, but at its core, trading is just the act of buying and selling assets over really short periods of time. So we're talking minutes, hours, maybe days. The goal here isn't to own something valuable for the long haul. Not at all. The only goal is to profit from short-term price movements. For example, a trader might buy a stock today at $100 simply because they think it's going to hit 105 tomorrow, or maybe in a few hours. Or, for some of those rapid-fire styles like scalping, within seconds. Once it hits that target, they sell, they take the profit, and they move on. It sounds incredibly simple in theory, right? Buy low, sell high, repeat. But in reality, it is anything but simple. Here's a look at the actual, exhausting reality of a trader's daily cycle. Step 1. You analyze the charts and the news. Step 2, you buy the asset. Step 3, you monitor it constantly. I mean, say goodbye to leisurely bathroom breaks, because the market can turn against you in an absolute instant. And then step 4, you sell for a profit, or, quite often, a loss. Because prices can drop just as fast as they go up, traders are forced to constantly make these super high-pressure decisions. When to buy, when to sell, how much risk to take, where to place stop losses to prevent a total disaster. Trading is an intense, skill-based activity that requires an enormous amount of time, probably way too much caffeine, and a lot of mental energy. Just look at our frantic little stickman here on the screen, sweating over those chaotic arrows. This pretty much represents the reality for the vast majority of people who attempt Path A. Most traders actually struggle and end up losing money. Why? Well, because we're human. The market is completely unpredictable, and our emotions naturally take over. Fear makes people panic and sell way too early. Greed makes people hold on too long, just hoping for a tiny bit more profit right before massive crash. Then there's the lack of discipline, breaking your own rules, overtrading, taking on way too much risk just to stay in the action. Look, if trading were as easy as social media makes it look, everyone would be rich. But so many beginners treat it like a trip to the casino, and that is exactly why they fail. Moving right along to section 2, Path B, the patient investor. Welcome to the much calmer, quieter world. If trading is a high-speed sprint, investing is a slow, steady marathon where you actually get to breathe and enjoy the scenery. Investing is a completely different beast. An investor buys assets expecting them to grow in value over years, not hours, not days, years. When you invest, you aren't placing a bet on a short-term price tick. You are actually buying a tiny piece of ownership in a real functioning company. Think about buying shares in Apple, Microsoft, or Google. You aren't buying them because you care if the stock goes up by $2 by tomorrow afternoon. You buy them because you look at their revenue, their innovation, and their competitive advantage, and you believe that business as a whole will be worth significantly more in the future. And guys, here is where the absolute magic happens. Look at our totally chill stickman here next to that steadily growing building. Investing benefits from something incredibly powerful called compound growth. Basically, this means your returns start generating more returns. Let's say you invest just $100 every month. Over time, that money generates a return. Then, those new returns generate even more returns. Your money literally starts doing the heavy lifting for you. It feels kind of slow at first, which is honestly why so many people underestimate it. But years later, the results are extraordinary. There's a really famous saying in finance: Time in the market beats timing the market. That one simple idea has reliably created more millionaires than trading ever has.
Let's look at Section 3, the crossroads, comparing the paths.
So let's put these two paths side by side to really understand the trade-off you're making when you decide where to put your hard-earned cash. The crucial point here is a fundamental difference in mindset. Traders focus almost entirely on price. Their main question is always, where will this specific stock go next? Investors, on the flip side, focus on value. Their primary question is, will this company actually be worth more in 10 years? One focuses on short-term prediction. The other focuses on long-term ownership. And that single, subtle difference in perspective changes absolutely everything about how you manage your money. And honestly, your daily life.
When you look at them directly compared like this, the trade-offs become super obvious. Trading operates on a very short-term timeline, bringing incredibly high stress and the need for constant, non-stop monitoring. Investing is a long-term game, specifically designed for lower stress and minimal checking. Now, the big trade-off is obviously in the gains. Yes, trading does offer the potential to make money faster, but it comes with much higher transaction costs and massive risk. You can lose money just as fast. Investing is slower, sure, but historically it's steadier, it has lower costs, and it is so much more reliable for beginners who don't want to lose their shirt. Trading might be exciting, but at the end of the day, boring often wins.
There's a quote that just perfectly captures this whole dynamic. A trader spends years trying to beat the market. An investor spends years letting the market work for them. Let that sink in for a second. The smartest thing you can do for your financial well-being is to let time be your greatest asset. Why fight a grueling uphill battle against the market every single day when you could just build a system that quietly builds your wealth in the background while you sleep? Moving into Section 4, finding your perfect fit. You know, personal finance is exactly that. It's personal. There really isn't a magical one-size-fits-all answer here. So let's hold up a mirror and see what makes sense for your daily life. Let's say you're a student, or maybe you work a standard 9-to-5 office job. Your best fit, without a doubt, is investing. Why? Well, because you have minimal free time during market hours. You're busy studying or building your career and just living your life. You want passive wealth growth, and you absolutely need it to be low stress. The hands-off approach of investing is practically tailor-made for you. You set it, you forget it, and you let compounding do the heavy lifting while you focus on your day-to-day. Now, what if you're a business owner or an entrepreneur? Actually, scratch that. The answer is the same. Your best fit is overwhelmingly investing. As a business owner, you already have enough stress, enough risk, and enough constant decision-making on your plate. Your primary focus needs to be on growing your own company. You should use investing as a powerful tool to build wealth safely and quietly, right in the background. You just don't have the mental bandwidth to fight the stock market every day when you're already fighting out there to scale your own business. So you might be wondering, is trading ever the right fit? Well, yes, but for a very, very specific type of person. If you happen to have hours of free time every single day, if you genuinely enjoy deep technical market analysis, if you're willing to spend literally years learning the craft, and most importantly, if you have highly disciplined emotional control, then trading can absolutely work for you. But you've got to treat it like a demanding, skill-based, full-time job. It is not some casual hobby you pick up for quick cash on your phone.
And finally, Section 5, the final verdict. So throughout this explainer, we've explored the fast-paced stress of trading and the quiet, steady power of investing. We've seen the risks, the rewards, and exactly who each path is built for. So what's the bottom line for someone looking to secure their financial future? I want to leave you with this final, incredibly powerful distinction. Trading can create income. Investing can create wealth. The smartest people understand the difference and use the right tool for the right goal. Look, trading and investing aren't enemies. They're just different tools in the toolbox. But true wealth isn't built by frantically chasing every short-term opportunity. It's built by making smart decisions consistently over time. If you're just starting out, focus first on investing. Build that strong foundation, learn how real businesses grow, and experience the absolute magic of compounding for yourself. So, I'll leave you with this thought. Are you just trying to make a quick buck today, or are you ready to start building the kind of wealth that will take care of you for the rest of your life?